The U.S. housing market is frozen as home prices refuse to go down despite the highest mortgage rate in decades. At this point, only a sudden surge in housing supply will crash the housing market, and there are some voices out there predicting such a surge. In today's video, we're going to look at how much of a surge in supply is possible and what the effect on home prices will be if it comes to pass. Let's get into it. In my last video on the U.S. housing market, I highlighted some of the risks to home prices, and one of those was the idea that there is a lot of pent-up supply that could suddenly come online and result in a housing market crash. The theory is that this pent-up supply is a result of a lot of home listings that ordinarily would have happened, but given the high mortgage rates we're seeing today, sellers are waiting on the sidelines because they don't want to list their home that has a 3% mortgage rate and have to buy another home with a 7% mortgage rate. I previously pointed out that this was hard to prove because there isn't a good source of data to show just how much pent-up supply is out there. After doing some research, I've come up with a method to get a rough estimate of this pent-up supply, as well as what it could do to home prices if it suddenly came online. First, let's look at how much pent-up supply could be out there, and then we'll look at what the effect on home prices could be. Here's a graph of home sales over the last 10 years. Up until the plummet in sales at the onset of the pandemic, there was a nice steady uptrend. Transaction volumes trend higher over time, primarily because of population growth. The more people we have, the more homes we need, and the more sales we have. Back in 2020, we saw the housing market freeze up and sales plummeted as people stayed home. There were a lot of homes that ordinarily would have been put up for sale and purchased that just didn't happen. Once the housing market picked back up again, we saw a rebound and buying spree through 2021 and into the first half of 2022. But then sales plummeted as mortgage rates surged. A lot of houses that would have been put up for sale and purchase just didn't come onto the market. To get a rough estimate of how many, I can impose a time trend of what sales probably would have been if the pandemic did not happen. When sales are below this trend, we can assume this is a rough estimate of pent-up supply. We had some of this at the onset of the pandemic and then after 2021. I can subtract the sales that happened from the trend of what could have happened to get this estimate. From the sales in 2020 and 2021 above the trend, we'll subtract that from our estimate with the assumption that these were some of the initial pent-up supply that did come online before mortgage rates went up. From these calculations, I find that there are about 2.3 million homes in this rough estimate of pent-up supply. So that's my rough estimate of this size of the pent-up supply. I say rough estimate because it is far from precise. There are a lot of factors that go into determining the level of home sales in the national market, but absent a better data source for a more precise estimate, this is what we have to work with right now. The next question is, what would be the effect on the U.S. median home price if all of these 2.3 million homes suddenly came on the market? Keep in mind, this is a hypothetical scenario. We're unlikely to see so many homes come on the market all at once, but it does provide somewhat of a worst case estimate of the effect on home prices. To estimate this effect, I developed a time series econometric model that considers various housing market indicators as well as overall economic indicators and their correlation with home prices over time. More specifically, this is the model I use to estimate the effect on home prices. I don't expect you to understand any of that. I just wanted to let you know I put a lot of effort into it. One advantage of being a professional economist with an expertise in econometric time series modeling, in addition to being a licensed real estate agent, is that I could do things like this instead of just giving an off-the-cuff opinion about what might happen in a given set of circumstances. When I run all the numbers, I find that a 2.3 million increase in housing inventory is correlated with a 6.3% decrease in the median home price, assuming all else remains constant. That last point is important. In my model, the only thing I changed was the housing inventory to see what the change in price would be. In real life, this is rarely the case, but it does serve to give us a rough estimate of the magnitude of price decline that could happen. Now, a 6.3% decline is definitely not a small decline for home prices, but it does fall short of a full crash in home prices of 30% or more that some voices are calling for over the next 6 to 12 months. The next question is why the decline in home prices, I estimate, is not bigger if all that pent-up supply were to come onto the market. Quite simply, it's because you have pent-up demand as well. You see, for every one of those houses that ordinarily would have come on the market and sold, but didn't, there was a buyer that would have purchased the home, but didn't because it wasn't on the market. For every seller, there's a buyer when homes sell. So if there's a lot of pent-up supply, there's also a lot of pent-up demand. Yes, home prices and mortgage rates are at record levels, but homes are still selling. Just take a look at the sales to list price ratio, which has maintained an upward trend back to 100 after the initial plunge due to high mortgage rates. Any reading over 100 means homes are selling above list price on average. This tells us that demand is firming up even as mortgage rates hit new multi-decade highs. There is a lot of pent-up demand in addition to the pent-up supply, and that is why I don't think we'll see a major housing crash as a result of pent-up supply coming onto the market. And it likely wouldn't happen all at once either. Now, there are some other theories out there for how we could see even more supply coming online. One of them is the Airbnb bust theory. The idea here is that there were a lot of homes purchased in 2020 through the first half of 2022 as investments and used as short-term rentals. The short-term rental market isn't doing that great right now, so we could see a sizable amount of these investment properties coming on the market as well. Another increased supply theory comes from the rental market, where we could see a large amount of apartments coming online in the near future due to previous construction, providing an alternative housing option that would suck demand out of the market to purchase a home. I'll be doing more research into those in the months to come, so make sure to subscribe and hit that notification bell down below if you want to know when those videos come out. But for now, having more pent-up supply coming onto the market by itself isn't likely to crash the market just because there's also so much pent-up demand to absorb it. I hope this video has been useful for you, and if you could hit that like button, it'd be greatly appreciated. Thanks for stopping by, and I'll see you in the next video.